Hi, this is Phaedra Troy, editor of PennEnergy.com. Welcome to PennEnergy's weekly video news update, coming to you from the show floor at OTC 2011. Breaking through technical barriers, oil prices have fallen this week, with Brent crude trading below the 120 mark at 117 in London, and West Texas Intermediate trading below the 110 mark at 106 on the NYMEX. Growing inventories in the U.S. pushed fundamentals to support the bears, as many traders are expecting an end to quantitative easing in the U.S. Nonetheless, unrest and violence in the Middle East and North Africa continue, which has buoyed oil prices on the fear that supply might be disrupted. As the global economy improves, demand grows, while the massive populations of China and India continue to industrialize, supporting oil prices above the $100 mark. In the U.S. Gulf of Mexico, BP awarded French oilfield services firm Technip a 10-year master agreement concerning the design, procurement, and construction of hulls and mooring systems for spar platforms, as well as the design of top tension risers for dry tree units. Within the framework of this agreement, Technip has already begun pre-FEED operations for the Mad Dog Phase 2 spar, with FEED on the project scheduled to begin later in 2011. Coming on stream in 2005, the Mad Dog oil field was developed via a truss spar moored in 4,500 feet of water on Green Canyon Block 782 offshore Louisiana. In July 2009, BP revealed that a southern extension well of the Mad Dog development had discovered an oil column measuring some 2,200 feet. And in 2008, the company encountered an oil column measuring 2,500 feet in the western portion of the field. Surmised from the Technip release, BP has opted to develop a second spar for the Mad Dog field rather than bottleneck production at the existing 80,000 barrel a day facility. Brazil continues to heat up, with Petrobras discovering another pre-salt oil field in the deep waters of the Campos Basin. Drilled on the Albacora field, the well transected nearly 800 feet of oil, and the reservoir is estimated to contain 350 million barrels of recoverable light oil. Additionally, during an OTC press conference, the Brazilian producer revealed that its break-even point for pre-salt development is now lower, just $35 to $40 a barrel, due to advancements with achievements in production on the fields. Also at the event, the company reported a riser issue at its Guara extended well test in the Santos Basin. The cracked riser forced Petrobras to keep production shut in during investigations into the incident, and while a new riser was installed, although production is expected to restart in days. Petrobras also addressed its ongoing construction project to build 28 new ultra-deepwater rigs. The company has started the first 7, with 21 to go. The company revealed that its production revelation has required less wells to be drilled, and that every year Petrobras rethinks the number of rigs it will require and adjust its plans accordingly. Nonetheless, the company remains committed to build the next 21 rigs. In shale news, Legend Natural Gas has closed its $900 million Barnett Shale purchase from Range Resources. Additionally, supermajor Chevron announced that it has taken an unconventional plunge with the Marcellus Shale purchase from Chief Oil and Gas. Chevron acquired some 228,000 acres in the Marcellus Shale, but the purchase price was not disclosed. Additionally, Enterprise Products Partners has announced a pipeline extension to move additional crude oil from the Eagle Ford Shale in South Texas for Chesapeake. Thank you so much for joining us. This is Phaedra Troy, editor of PennEnergy.com. Visit PennEnergy.com often to find the latest news in the petroleum and power sectors.